Seize all activities and pay close attention, for the recent events will irrevocably alter the course of Bitcoin history. The greatest single acquisition of cryptocurrency ever recorded was just completed by Blackrock, the most powerful asset management in the world, which controls investments totaling over $10 trillion. The sum is so enormous that it is beyond the comprehension of the average human mind. An institutional buying operation has been underway in stealth for months, and the amount of Shiba Inu tokens bought is 3.36 trillion, 323 of $1 trillion. No, that is not an error. There was no mistake. Huge sums of money, the kind that could fund entire nations' economy, are pouring into Shiba Inu. Just so you know, the gross domestic product of the majority of nations on this planet is lower than 3.36 trillion. Just a few short years ago, the total market value of gold was lower than this, and that sum was just invested by BlackRock into SHIB token accumulation. Unusual wallet behavior linked to BlackRock's known Bitcoin infrastructure was observed by blockchain forensic specialists, leading to the discovery. Crypto experts have finally been able to trace the movement of large quantities of SHIB to BlackRock's institutional custody systems, thanks to months of transfers to cold storage addresses. Until the data was validated by various independent verification systems, the early reports appeared unrealistic due to the vast magnitude of accumulation. Shiba Inus weren't bought on the spur of the moment by BlackRock. This is the culmination of years of careful planning, including the creation of infrastructure, regulations, and strategies, all with the goal of making them the dominant institutional holder before anyone else notices. Every time the market dropped, every consolidation phase, anytime retail attention was elsewhere, they methodically accumulated. When you consider the impact of such large-scale institutional purchases on SHIB's supply dynamics, the mathematical ramifications become mind-boggling. An enormous fraction of SHIB's total circulation supply, at token prices as they are, is 3.36 trillion. For other investors, the supply has shrunk to levels where explosive price rise is theoretically unavoidable due to BlackRock's massive purchases. This purchase is completely groundbreaking from a strategic standpoint, and I will explain why. Ever since the debut of their Bitcoin ETF became the most successful ETF launch in financial history, BlackRock has been getting ready for this moment. They demonstrated that institutional investors' hunger for exposure to cryptocurrencies through regulated investment products is insatiable. They now have huge holdings in the most popular and rapidly growing tokens, putting them in a prime position to dictate the next wave of cryptocurrency adoption. Not only does BlackRock have effective control over SHIB's price discovery mechanisms, the 336 trillion figure reflects the overall institutional positioning strategy, which includes token purchases, options, futures, and derivatives. They're doing more than just piling up shares, they're staking out a dominant position in the market, giving them long-term control over SHIB's future. The strategic philosophy for Shiba Inu was revealed in internal documents that leaked from BlackRock's cryptocurrency business. They found that SHIB had all the right ingredients: widespread support from the retail community, deflationary tokenomics thanks to Burns's growing real-world utility, and prices that enabled massive accumulation without setting off price spikes that would make buying too expensive. This revelation's timing is extremely explosive, because new regulations are making it much easier and more appealing for institutions to invest in cryptocurrencies at the same time. Knowing that rival institutions will quickly establish comparable holdings at prices that will be significantly higher than what BlackRock paid, BlackRock has been preparing ahead of these regulatory developments. Following the success of their Bitcoin ETF, they laid the groundwork for Shiba Inu. Institutional recognition is akin to $1 billion in market capitalization. All presumptions about value are utterly disproved when the biggest asset manager in the world invests 3.36 trillion into a cryptocurrency that its detractors have deemed a useless meme coin. After BlackRock made SHIB a core institutional holding, traditional finance could no longer afford to disregard it. If they follow BlackRock's investing strategy, pension funds, sovereign wealth funds, and family offices will have to assess their own SHIB allocations. As a result, additional institutional capital follows BlackRock's lead and buys into the same positions, increasing the initial purchase impact by a factor of 10 or 20. Crypto markets have never encountered a supply shock like the one caused by BlackRock's acquisition. With 36 trillion worth of tokens sitting in cold storage for the foreseeable future, The supply for other buyers will shrink to the point where even a small increase in demand will cause prices to rise exponentially. Market makers are already having a hard time providing liquidity at the current price levels. The massive reduction in supply observed on all major platforms is confirmed by the data from the exchange reserve. As BlackRock's accumulation strategy moves on, large amounts are steadily vanishing from the market. Upon entering institutional custody, all tokens are essentially taken out of circulation for long periods of time, leading to a substantial increase in price discovery due to artificial scarcity. Everything that the basic accumulation data suggests is backed by the technical analysis. During this covered period of large institutional buying, SHIB has been consolidating within narrow bands. Most individual investors will be caught unawares when the consolidation pattern suddenly bursts into vertical price appreciation after word gets out about BlackRock's posture and other institutions race to establish similar exposures. For those in the know about the implications of BlackRock's acquisition, the reaction from the global market has been swift and strong. Before prices go beyond realistic entry points, Asian institutional investors are rushing to boost their holdings of SHIB. Because of BlackRock's enormous stake, European pension funds are convening emergency meetings to assess their exposure to Bitcoin. Options trading activity shows that high-level traders were aware of BlackRock's accumulation before news broke. When you consider that institutional money was preparing for the impending price explosion that occurs when $3.36 trillion enters relatively tiny market cap assets, the massive call volumes that struck values that appeared unattainable weeks ago suddenly make great sense. Investors who bought Shiba Inu during times of market volatility and skepticism finally got their money's worth with BlackRock's approval. From the beginning, members of the community saw possibilities in SHIB that conventional financial institutions missed. By pouring more money into SHIB than most countries' yearly budgets, the most powerful asset manager in the world has proven that belief. The impact on the market's psyche is immense. Every investor throughout the world changes their perspective on an investment when BlackRock invests $3.36 trillion into it. In an instant, SHIB goes from being a speculative meme coin to a real asset class that can be included in diverse portfolios like any other investment. Analysts on Wall Street are rushing to update their models and predictions after spending years arguing that SHIB would never be successful. The validation of an investing thesis by unparalleled capital deployment by the world's largest asset manager turns mathematical impossible into mathematical certainty. It was just purchased by BlackRock. The $3.36 trillion acquisition changes everyone's perception of the Shiba Inu's capabilities. There is going to be a legendary wealth transfer for people who are positioned with institutional money.